All right, guys, let's go ahead and get started. Thank you all for being here today. We have some great stuff here with Jen Smith and Kate Roth from Murphy Business Sales. So thank you, ladies, for being here, and go ahead and take it away.
Wonderful. Thanks so much, Sheree. It's always a pleasure to be on with you and the good folks in the Signworld network. I'm Jennifer Smith. This is Kate Roth. And this is, we've done these webinars a couple times for you now. When we were doing in-person conventions, we were pleased to be doing a workshop with you. And certainly we've talked to several of you and done some valuation work, and we're doing some actively selling some of your businesses. So we really appreciate the opportunity to talk to you today about our latest offering and see if it's something that you might find helpful or of some value. So let's go ahead and get started. Our agenda today, and I apologize for clearing my throat, it's Southeast Missouri around harvest. And so you cannot imagine all the stuff that's in the air here. So apologize if I clear my throat or have to go offline and take care of that. So our agenda today, we're going to spend just a quick minute on who we are for those of you that maybe haven't been on a webinar or a workshop with us. We want to talk about why knowing your value is so incredibly important, when you should prepare for sale. And I know Signworld has done such a great job of saying, begin with the end in mind, right? That's something that Signworld has really been very adept at talking about with all of you. We absolutely agree with that. And if you're getting a little bit closer to the jumping off point, we're going to talk about that today. We're going to talk about a couple of case studies for businesses that we've experienced very recently, like within the last couple of weeks. And then we're going to talk about value coaching as a way to increase the value of your business. And then we're going to spend a little bit of time on question and answer. We'll certainly get you out of here on time. So real quick, just who we are. We're big, we're everywhere. That's one of the reasons why we have a great partnership with Signworld, because you guys are all over the place as independent sign company owners. And there's about 350 other business brokers that do what we do in the Murphy system, and they're all over the United States. And those are folks that we co-broke with. You'll see that last bullet point there. That means that we collaborate and work to help find buyers and sellers for each other. So the great thing about the Murphy business system is we are profoundly ethical. In this industry, business brokerage is not an ethical industry by and large. There are a lot of sharks out there, people that just want to take your money. They'll tell you what you want to hear and tickle your ears. And we are just not like that at all. We're going to tell you exactly what we think we can and can't do, and make sure that we've got the means to follow through on that. Just this week, we're very pleased to announce, if you've ever heard of Dave Ramsey and his organization, he has a business division. Dave Ramsey's business division is called Entre Leadership. And just this week, we announced that they have selected us to be their endorsed provider for business valuations and business sales. And so we're announcing that this week. That's kind of a big deal for us. And hopefully that can help you guys have a higher level of confidence that we really are those profoundly ethical business brokers that we say we are. And one big question that we get is, are there really buyers out there? And the answer to that is absolutely. We've always experienced about 10 buyers to every seller. And so that landscape has not changed, although what buyers are looking for in this post-COVID environment sometimes will be a little bit different. So it's a little bit about who we are. Now, Kate's going to talk with us a little bit about why knowing your value is so incredibly important.
We always think that every business owner should always know what their business is worth at any given moment. So it's not just important right before it's time to sell, it's important at all times. One of the big reasons for that is financial planning. For most of you, your business is probably one of your largest assets and a big chunk of your retirement plan. So when you're working with a financial planner, we want you to have an actual accurate number to give them. Otherwise, it's just garbage in, garbage out when they're doing your financial planning and projecting for your retirement. It's also good to be prepared for an emergency. Those can come anytime, always unexpected. And so if you're suddenly unable to run your business anymore, having that valuation on hand will help relieve the stress from your family as they try to take it forward. So if we've got that valuation on hand, we've already partnered together, we know your business, your family will have that connection with us and can just turn to us during that stressful time. It's also good for daily decisions. If you know where you stand at any given moment, you can make the decisions to advance your company and grow that value. By having that outside opinion from us, we can help guide you on what might be a good decision to make and to grow your company. We also sometimes run into people who just get approached by a buyer. And if a buyer just suddenly reaches out to you and says, hey, do you want to sell? A lot of times those are strategic buyers who are wanting to move quickly. They might be looking at several different sign companies, different opportunities. And if you just kind of have to pull a number out of your hat, you could either leave money on the table or be so high that you offend them. So having that valuation on hand, you can give them a realistic asking price for your business and then come back to a broker to help you actually negotiate and paper that deal. And then one of the last reasons that we say it's important is just for growth. Just growing revenue for the sake of revenue doesn't always increase the value of your business. So once you know the value and you've partnered with a broker, we can help you determine, is it worth opening a second location? Will that actually grow your value? Should you hire more employees? We'll help you make those decisions that'll actually grow the value of your business instead of just growing for the sake of growth.
Yeah, thank you. And everyone, if you wouldn't mind just double checking your settings and make sure that you have your mute on, that'll be helpful just for background noise and things like that. So the next question is when to prepare for sale. And like we said at the beginning, Signworld is very wise in saying, begin with the end in mind. And really, that could not be a truer statement. You need to have an exit plan from the point at which you launch in the first place. But let's say that you've been doing this for quite some time and you're thinking, well, I'm probably within 3 to 5 years. That's when things are really getting serious in terms of preparing for sale and positioning for a buyer. I kind of think about it like, you might have lived in your house for the last 15 or 20 years, but if you're thinking about retirement and you're thinking about selling that house, you're going to start repainting and updating and adding some new hardware to those cabinets and things like that, doing some staging for your house 3 to 5 years in advance. All of those things that you didn't do for yourself all those years, you're going to do for a buyer, right? And the reason for getting out 3 to 5 years is because changes take time to have a financial impact. So if you make a positive change that's going to either increase revenue, decrease expenses, or widen those gross profit margins, it's not going to happen overnight. So the last thing you want to do is make a change, have the buyer not really be sure what the outcome of that change is going to be, and also you really haven't had the time to reap the reward of the change that you made. So we want to make sure that you have time to really see the fruits of those investments. Buyers are going to look back the past 3 years initially. When we go to market and we market blindly and nationally, we're putting those last 3 years of recasted financials out there. That's important because if those don't look good, chances are we're going to have a much harder time attracting a good buyer. Now, when it comes to actually doing the due diligence after an offer, they're probably going to look farther back than 3 years. But really from a curb appeal standpoint, you really want to make sure that those last 3 years look great. And then finally, you really want to sell when the business is ready to be sold, not necessarily when you're ready. And here's what I mean by that. You may have a magic date in terms of when you think that retirement might fit best into your family plan or your life plan. But that may not be the best time to actually sell the business. You want to sell the business when you are on top of your game. Your earnings have never been stronger. The trajectory looks fantastic and everything is humming along beautifully. And that may not be that may not coincide just perfectly with when you're ready. But if you want to get top dollar, we really want to pay attention to when the business is ready for sale. So let's look at a couple case studies. Kate, you want to take the first one?
Yeah. So these are all situations we've seen this year, if not just in the past few weeks. And we thought we'd highlight these just to kind of give you an idea of what we see regularly when we talk with business owners. So our first case study is a retail store located in the Midwest. They came to us and wanted to value the company because they had, the owner had his brother-in-law was interested in buying it to take over for him. So when Jennifer was talking to him kind of initially about, learning more about the business and things of that nature, he told us that he thinks his business is worth $3 million. So of course, Jennifer said, why? Where'd you get that number? And he shared that he got that information from a Wall Street Journal article. And we see that a lot. Business owners read an article somewhere about a publicly traded company or a company that's much larger and how those values are assigned. And unfortunately, that doesn't translate into the smaller companies that we usually work with. The more, not necessarily just mom and pop companies, but companies that aren't publicly traded. So, we warned him up front that 3 million probably was a little high for what he was doing. And then when we got into his numbers, he really was a really great, strong business for his industry. We were really impressed with his company. But when it came down to it, it was only worth $800,000. So he's been basing all of his financial planning on that $3 million number. We had to tell him it was only worth $800,000. And then the real kicker that just absolutely destroyed us and broke our hearts, he's got stage 4 cancer. And they're preparing for his final days. So he doesn't have that time to react. So we just sit and we think, gosh, if he had come to us a few years ago, learned what it was worth, he could have taken steps to either change his planning or actually grow the number to what he needed it to be. But now, unfortunately, because he's in that health emergency stage, he doesn't have time to react.
Yep. So our second case study here is a franchise service company. The franchisor is actually the one who came to us to try and help the franchisee sell. And the reason, again, is that they've had family health issues, they've had weather events, all kinds of things. When we got a hold of the business financials and really got to dig into it, we realized that, and this is a service-based business, that the business has been losing money for the last 2 years. And it hasn't been just losing a little bit of money. They've lost $250,000 in actual cash over the last 2 years. And to kind of add insult to injury there, the owner had pumped in $120,000 of his own money to continue making payroll, to keep the business afloat and to keep it going. So what we have is a franchisee who is out of personal money. The business has been losing and hemorrhaging money, making payroll, but not really because it should. And the franchisor is now threatening to back out of the territory and stop supporting the franchisee because the franchisee owes back royalties. And so, unfortunately, the business is not sellable at this point. The $120,000 that he pumped in personally for payroll is just out the door. He's going to have to shut down the business and pay back those franchise royalties personally. So another one of those situations where, gosh, if we had talked to him when things started getting a little bit rough, we may have been able to help advise him and certainly tell him that investing the personal money when the outlook for the business was not good was probably not the best way to go, but we had a little bit too little to say, a little bit too late on that one.
So now let's switch to a happier one.
We like happy stories. Yeah, let's do a happy one.
So we worked also recently with an agricultural sales company. They came to us at the end of 2018 originally, just to get a valuation number because they were starting to think about selling. So we performed that valuation for them, and it came in less than they wanted. It wasn't bad. It just wasn't hitting their magic number. So they decided, well, I kind of just want to hang on to it for a little longer and see how we can grow it until we can get to that number that we need for retirement. So during that valuation call, Jennifer, who just can't help herself, she's a consultant at heart. As we look at these financials, we get a really good feel for the company and things that can be tweaked a little bit to make it stronger. So during that call and some extra consultation with them later, Jennifer was able to give them advice on just little things they could tweak here and there, charging more for this or restructuring that, to help them improve that value of the company. Because they're honestly a little maxed out on what they personally can do volume wise, but there were several things that we realized they could change just to increase the value of the company. So they took that advice and ran with it for a year. I think we talked with them a little bit during that course of the year. And then at the end of 2019, they came back to us and said, all right, let's value it again. After they'd made all those changes. In the course of a year, they added $200,000 to their valuation, which was incredible. That one made us so happy. It's just proof that small changes can really make a big difference, depending on your situation. So at that point, we had hit their magic retirement number in terms of value, and they said, all right, let's sell it. So we took it to market for them. But we just love those kind of success stories where we're able to help and coach and guide along the way to get people what they need.
Yep. And that company has attracted a lot of attention. We've had a couple pretty serious conversations with buyers now on that particular business, and they continue to get stronger because they continue to kind of double down on what we were doing in the first place. So that's absolutely a success story, and we really would much rather have 10 of those third stories than any of the first two. Mm-hmm. So as Kate and I were reflecting on, some of these difficult situations and difficult conversations that we have with clients, we realize that when we coach and train and mentor and develop our clients that are trusting us with their valuations and trusting us with the sale of their business, they do better, they're healthier, they have better experiences, and we have fewer tragic stories to tell. So we decided that we're going to do something about it. And that's the big reason for our call with you guys today, is to let you know that we're developing a new set of packages. We're going to launch on January 1, and they're called value coaching. And value coaching is a way for business owners to get knowledge and insight and increase their return on investment by partnering with us year round to let us walk with them and help them craft a strategy and have very actionable, deliverable things that they can do to help increase the value of their business leading up to an eventual sale, whether that sale is in 3 months or 6 months or 2 years or 5 years or whatever. These value coaching packages will help you build a stronger, healthier business. And at the end of the day, that's good for everybody. It's good for the seller, it's good for the buyer, and honestly, it's good for our state of mind as well. So when we talk about these value coaching packages, the three big things that are going to come out of it, you're going to get an updated business valuation every year, so you always know where you stand. That goes to the beginning of our conversation today about always know your value. So we've included an annual business valuation in both of our packages. The second one is insight, and that's learning what you need to be doing to prepare your business for sale. It's taking all the all the knowledge and experience that we've gained over the last 10 years of doing this, and applying that to your business and your industry to help strengthen your company. And then the third deliverable here is a return on investment, or ROI. And the goal here is to keep our value coaching packages very reasonable and very cost effective, so that you have a really great return on investment when you go to sell. Similar to that third case study that we talked about, you know, the sellers had very little invested in talking with us, and within a year they had $200,000 more on their value. That's the kind of return that we want to get for folks across the board. So we developed two value coaching packages. The first one is the value package. This one is the least expensive one. It includes an annual business valuation report with a 1-hour consultation call. You probably know, if you've been in Signworld, that our valuations are typically $1,500 a year, but you, as a member of the Signworld network, get them for $1,000 a year. So that's the value of that bullet point, if you will. And as Kate said, I can't really help but consult. So you're going to get that 1-hour consultation call no matter what you do. We're going to talk about what we're seeing and what you can do to improve. And then secondly, we're going to start producing January 1 some informational monthly videos with actionable takeaways. And these are not 2 or 3 minute, hey, rah-rah sessions. These are 15 to 30 minute call or videos that we're going to create and send out to you, that are going to take a really deep dive in a particular area, so that you can go through and look at your own financials, look at your own structures, and diagnose any problems or validate that you're doing things correctly. And it's going to really give you an opportunity to kind of take a cross section of your business each month and work on that. So that's kind of a self-study using these videos. That particular package is $175 a month. So again, we're trying to keep these really reasonable for you. The slightly larger package is going to be the coaching package. Again, you're going to get that annual business valuation with the consultation call. That's something we believe really, really strongly in. You're going to get those videos that we just talked about. The big differences between the value package and the coaching package is, with the coaching package, we're going to do a quarterly 2-hour coaching call, just you and me on a call, looking at your business and your financials and your structure and your struggles. And we're going to talk through those. We're going to make action plans, and we're going to have some accountability, because you know that you're going to get on the call with us again next quarter, and you'll have some homework to do between each of our calls. So that's not a self-study. That's very much a taking a deep dive and looking at your particular business and how to make it healthier. And then, of course, we offer additional coaching and consulting if you find that you need a little bit more of that. So we're going to provide a discount on those services as well. And that particular package is $400 a month. The thing that we love about this new offering, this value coaching, is whether you select the value package or the coaching package, you're going to be doing something intentional to grow the value of your business and to make it stronger and healthier, whether you're going to sell it in the next, like I said, 6 months, or whether you're going to sell it in the next 6 years. So this is just another tool for you to work with us and position your business so that it's bigger and better and stronger down the road.
Well, and when it's time to sell, we've already got that relationship. We already know your business really well. So that'll help us take it to market better. We'll have better answers for potential buyers that ask us questions, because we'll know you and your business really well at that point.
Yeah. Okay. So that's really all the content that we have to share with you today. We'd like to open it up for your questions now. So feel free to unmute yourself or put a question in the chat box, or however you'd like to do that. We'd be more than happy to answer any questions you have.
Any questions? You guys did a great job explaining everything. I do know that we have Becky here, we have Dick. They are brand new Signworld owners. So it's good that they kind of came in right at the beginning to have a good fresh start here. Like you said, start the end at the beginning. Dick, did you have any questions?
No, Jen, Kate, thank you very much. Like Sheree said, we're just starting out. I literally, a month ago, we just signed the contract. So I was just curious to see what you guys share and you go through. Outside of those packages, you said you have a normal, or you had a offering that you offered a Signworld company currently, but
Yeah.
Is that going to go away, or is that still on the table?
No, that's still good. This is just in addition to all of the things that we've been doing all along anyway. So because you're a member of the Signworld network, a business valuation would normally run $1,500. That's just our rack rate.
Evaluation on its own.
Yes.
It's not built into the package.
Yes, evaluation on its own. But because you're part of the Signworld network, your cost of having a business valuation is $1,000.
And what's involved? What goes through with that? I guess what's included with that?
Yeah. So if you're interested in doing something like that, we ask that you reach out to us. We'll send you an engagement letter. And the engagement letter has a whole bunch of questions on it that we use to help understand the size and scope and scale and risks of your business. It's pretty easy to fill out as an owner. And then we need 3 years of tax returns and a trailing 12-month profit and loss statement. And then from there, Dick, we usually have some questions surrounding your financials. We all do things as business owners to drive down taxable income, and some are more creative than others. So we make adjustments to the profit and loss statements to get at what the business is actually producing. And then we run comps and 3 different valuation methods. All of those are weighted, and we look at the business from 3 different vantage points, if you will. And when we arrive at that value and we look historically at the last 10 years of doing this, we compare our business values with our actual sale prices. Our business valuations are accurate plus or minus 3%. So we're very, very confident in our valuations and how accurate they are in terms of predicting actual sale prices and market value. And with that, you get about, the report's usually about 17 to 20 pages that you get to take with you and hopefully track over time and use that as a benchmark.
Well, like I say, I haven't even opened the doors yet, but I appreciate it. Like, I'm just trying to understand the investment and looking forward. So I appreciate your presentation today. Thank you.
Sure, no problem. Congratulations and good luck to you.
Thank you very much.
Let's see, we've got a comment here.
Becky, we love Dave Ramsey too. So we've actually been members of his EntreLeadership offerings, just members of their advisory groups and all that. So for us becoming that partner, that's us personally here in our office, not the Murphy brand nationally. So we're pretty excited about that too, because we are big fans as well.
Yeah. Yeah, and that whole thing came about, just if you happen to be interested, because we were a part of the EntreLeadership group, the Dave Ramsey organization started sending us referrals and saying, hey, can you help so-and-so do this? Can you help so-and-so do that? And then they were so pleased with how we were handling the other EntreLeaders in the group that when they put together a toolkit of national businesses, they said, hey, will you guys be a part of that? And we were really honored because to us, anything that Dave Ramsey is going to endorse has to have a pretty high bar. So we were pretty pleased about that. Any other questions?